Welcome back to our channel, that is Quick Learning. So now our topic is sources of equity finances. This is a very important topic in finance management as well as small and medium sized entrepreneurship, or how to manage your business, how to start your business, how to manage your financing, and what is equity finances. There are a lot of topics that should be covered in this presentation. So kindly listen all of the presentation and subscribe to my channel. This will help me a lot. Thank you. So, the secrets to successful financing. Before understanding equity financing, you should know how to do a successful financing. So, choosing the right sources of capital is a decision that will influence a company for a lifetime. The money is out there, but the key is knowing where to look. Creative counts. Entrepreneurs have to as creative in their searches for capital as they are in developing their business ideas. So this is a major mistake that many entrepreneurs or business students do. They focus on their creativity in business ideas, but they didn't bother about how they develop and how they gather their capital. So, number 4 is the internet puts at entrepreneurs' fingertips vast resources of information that can lead to financing. 5. Be thoroughly prepared before approaching lenders and investors because they are professionals. They can make you fool and you didn't know about them. So you have to be prepared before approaching them. Number 6 is looking for smart money is more important than looking for easy money. You can't go for a shortcut like you go for easy thing. No, you go for smart thing. And number 7 is plan and exit strategy. So there are 3 types of capital. Number 1 is fixed. So basically fixed capital is a capital that is used to purchase a permanent or fixed assets of the business, like your building, land, equipment. And second type of capital is working, that is used to support the small company's normal short-term operations, like you have to buy inventory, pay bills, utilities, wages or salaries. And number 3 is growth capital, that is used to help the small business expand or change its primary direction. So this is a diagram that I especially made for you guys to understand that if you in a startup, then business is in a conceptual phase and exists only on paper, obviously. So the possible sources of finance funding should be likelihood of using each source is H. H is highly likely, P is possible, and U is unlikely. Okay. So if you have the startup, then personal savings obviously highly. You have to invest from yourself. Retained earnings unlikely. Friends and relatives highly, obviously. Angel investors highly. Partners highly. Corporate venture capital possible. It is possible. Then venture capital unlikely. Initial public offering unlikely. But if you in your early stages, like business is developing one or more products or services but is not yet generating sales, then you have to invest your personal savings. Yes, highly. Retained earning likely. Friends and relatives highly. So this is a graph, very easy to understand for you, that will help you from your exam point of view as well as your career and the business point of view. And if you are your expansion, like business is selling products and services and is generating revenue and is beginning to establish a customer base, then these should be. And if you are at a profitable stage, like company establish a customer base and is profitable, then you will have this graph. Okay. So sources of equity financing. Number 1, personal savings. Number 2, friends and family members. Number 3, angels. Number 4, partners. Number 5, corporations. Number 6, venture capital companies. So, and number 7 is public stock sales. So these are the sources of equity financing that you should go. This is a very important MCQ as well as a short question from exam point of view, and if you are looking for a professional, then you know where to look for finance. Then personal savings, obviously you all know what is personal savings. So the first place an entrepreneur should look for money is obviously their personal savings. Then the most common source of equity capital for starting a business. And GM study said that typical entrepreneur provides 67.9% of the initial capital requirement. Then friends and family. So after emptying her own pockets, an entrepreneur should turn to those most likely to invest in the business, like their friends and family members. And again, GM study, this is a very worldwide accepted research that said that across the globe, the average amount family and members and friends invest in a startup business is about $3,000. Huge amount. Then be careful. Why? Inherent dangers lurk in family friendly business deals, especially those that flop. Then, guidelines for family and friendship financing deals is consider the impact of the investment on everyone involved. Keep the arrangement strictly business. Educate naive investors. Settle the details up front. And never accept more than the investor can afford to lose. Then guidelines for family and friendship financing deals should be create a written contract. This is a very common mistake many people do because they trust their own family and friends. So at the end they will get at a loss. So treat the money as a bridge financing. Then develop a payment schedule that suits both parties and have an exit plan. Keep everyone informed. Then number third source of equity financing is angels. So angels are basically the private investors who invest in emerging business startups in exchange for equity stakes in a company. And it is the fastest growing segment of the small business capital market. Now this is a graph that I took from sources mentioned bottom left. The Center for Venture Financing, with some more School of Business, University of New Hampshire, and I put the link so that you can, if you want to go in a deeper research, then go with this website and search. But I put the enough information for you to form exam point of view as well as from business and a career point of view or a job point of view. So this shows that the amount of invested in billions and number of firms. So in horizontal there is a number of firms, and in vertical we have the billions, how many billions are invested. So this said that how many angels financing people get, entrepreneurs get throughout the year. Okay. Then so angels are the ideal source of financing for companies that have outgrown the capacity of friends and family members but are still too small to attract the interest of venture capital companies. So the venture capital companies are something that is big than angels, and angels is something that can private companies that can lend you a loan for your small startup. Then key to find angels. So angel almost always invest their money locally and can be found through networking. Another avenue is angel capital networks on the World Wide Web is www.com. So you can, if you are planning to start a startup or want to become an entrepreneur, so you know where to look for angel. Then number 4 is corporate venture capital. So about 300 large corporations across the globe invest in startup companies, and 13% of all venture capital investments come from corporations. So average CVC investment is equal to $3.52 million. So it is a huge amount that will help you to understand that how easy for you to start your own business if you have no money, or if your friends and family and you can't afford to start your own business. So you go for corporate venture capital. And so the capital influence are just one benefit. Corporate partners may share marketing and technical expertise. So what do venture capital companies look for? So this is a very important question for you, because there are a lot of people who want to do their business, but why do venture companies select you to offer you money? So you should be prepared on these terms that I'm going to tell you. So number 1, your company should have competent management, competitive edge, growth industry, viable exit strategy, and intangibles. So these things that you should have so that any corporate venture company can invest in you. Then going public. So going public means the initial public offering. When a company raises capital by selling shares of stock to the public for the first time, it is called initial public offering. Okay, so this is another source of equity financing. And the advantages of going public is the ability to raise large amounts of capital, improved corporate image, improved access to future financing, attracting and retaining key employees, using stock for acquisitions, listing on a stock exchange. So these are the advantages if you go for going public for your financing. And what are the disadvantages? Obviously, everything has some disadvantages. So disadvantages are dilution of founders' ownership, loss of control, loss of privacy, regulatory requirements, and reporting to SCCP. And last one is filling expenses. Then more disadvantages are accountability to shareholders. Obviously, if you are owner of your own company, then you are not accountable to anyone. You are at your own, at your profit and your loss. But if you are doing for going public for source of equity, then you have to be accountable to shareholders because they are your shareholders. And the pressure for short-term performance, obviously, because everyone wants to perform good and wants their money back. Then loss of focus. So this is a class activity. This is a activity that I put for use, like if you are a student or even if you are a job holder or going for a job and starting your own business. So this is a question, like you and your group fellows want to start a small business and you are looking for angel investment. So what are the possible ways of finding one? So in my if you listen the whole presentation thoroughly, you understand what is an angel investors and what are they capable of and what they are looking at. So you should know that what are the possible ways of finding one. So this is very important for any entrepreneur, any student. So if you want, so you can search on a Google, but Google tells a lot of answers. So you can comment me and I will tell you the answer, or if you want, I make a separate video on it because it is a very important question. So that's all from my side. This is a copyright and all of the things. My side, if you have any questions, then kindly comment me and kindly subscribe to my channel. It will help me a lot, and share it with your friends. And if you have any query, then comment me, or if you have any topic that you want to, so that I can make a presentation on it, so comment me. Thank you all from Quick Learning.